What I'll quote the boss of Halliburton here saying, if I could pinpoint the direction of oil prices, I wouldn't be sitting here, I'd be on the beach in the Bahamas. But having said, given that setting, I'll do my best. And the way I see it is, I am always biased to the supply side. My background is in supply side analysis. And the way I see it is that there is plenty of crude oil out there. There is trouble, there is geopolitical trouble, there is further trouble on the horizons. Libya is not a happy place, Iran is not a happy place, Russia is not a happy place. That said, that is being counterbalanced by the fact that there is just too much crude oil in the market and the US is not importing as much. Now, for the next 6 months, let's say from January 2015 up and until the summer, the way I see it is that the current price correction, mind you, I don't call it a slump, I call it a price correction. It is not a slump. It's not a return to 2008 where we've gone from $144 to $37. So this price correction, as I define it, is likely to continue, and we'll have some sort of a to draw a strange sort of analogy, we'll have sort of a skating ring type mentality. We'll have a couple of days where we'll go down, a couple of days we'll go up, but we will be in this 40 to 60 range between now and June 2015. And how it will then sort of play out is that if this $40 to $60 range gets heavily entrenched, both in sort of trading psyche in terms of the wider market dynamic, we will see there will be a supply side reaction. For starters, I would see definitely OPEC would meet again. This time even the Saudis won't be able to resist a cut. That would be one factor. The second factor would be that some of these oil and gas projects, especially unconventional projects, whether we're talking the States, the Canada, the Arctic, people will start having second thoughts saying, well, you know what, let's hold fire for the moment. Let's hold back, let's not bring these projects on stream. And that will have a supply side impact, if not sort of physically, definitely in terms of sentiment. People will start thinking that some of these projects are off stream for the moment. There will be a supply side, if not a physical correction, there will be a sentimental correction in the thinking. And that will start gradually, slowly start lending support to the price. So between now and June, I see the price sort of coming down. And around about somewhere around the summer, once we sort of enter into the refinery upgrade season, where some of these refineries sort of go off stream, and some of these the oil and gas production facilities see their usual summer seasonal maintenance, we will see a gradual uptick in price. How will the remainder of 2015 pan out? I still think that there will be a demand uptick in Asia, and I would think that will again lend support to the prices. OECD demand, well, it remains, it has been tepid for years, and it's likely to remain pretty poor for 2015. I don't see that anything changing there. But I think consumption in China, India, Japan and South Korea will lend support to the price, and I do think we should end 2015 averaging around $80. The only caveat that I will attach here is that if we have a downturn on a global scale, we're not talking about Italy having negative quarters or Germany, but if we kind of see, to a certain extent, the market can even withstand a Eurozone downturn. But if we see a sort of ripple effect, Japan's not doing too well at the moment, and if we see a ripple effect around the globe, and there are a few quarters of negative growth, then the oil market is in a little bit of trouble. Then we could see a $40 price. So these are strange times, but the way I see it, barring a financial tsunami, I still think you'll probably be looking at an $80 price come the end of 2015.